Okay, so let me talk about, I'll go into a few things before we move on from mining. So my opinion on mining Bitcoin is, I said, the horse has bolted. Um, so the reality is people are going to be mining Bitcoin now. They use network computers because one computer is not powerful enough. So they often network with a group of computers, or you can actually go out if you want. In my manual that in the book that I wrote about it, which you'll get a copy of, it talks about where you can actually go and buy mining machinery, which is basically not from Caterpillar and big trucks. It's actually computers, certain hardware type computers that are very good at mining. So you can still mine. Now you're going to say, well, some people say, well, it's costing a lot more electricity than the value of Bitcoin. Before you could mine Bitcoin, but it was only worth 1 or 3 cents. So the downside was it was easy to mine in the early stages and less expensive, but then again, it wasn't worth much in the early stages. Now it costs more to mine because so many more people are doing it. It's harder to break the algorithms because as up to 12, they said 10 million now, it's now 12 million of the 21 million that have been mined. The closer it gets to 21 million, the harder and harder it is to break the code because it gets less and less that they release out. But the flip side of that is Bitcoin went up to $1,250 as of today. It's around $690, $700 depending what exchange. So it's worth a lot more. So it costs a lot more, but it is worth a lot more. Making sense? So my opinion on mining is not saying I'm saying the horse has bolted for Bitcoin. But what I am saying is that if you want to still do mining, what a lot of people are now moving towards is the other currencies. Bitcoin is the leader in digital currencies. It's not the only digital currency. We have one of the handouts that you have there. Do you have a copy? This one would have been sitting separately to the folded one. I'll just cover that quickly. So Lou will talk a little bit about mining later, but so it's not to rule out mining, but if you want to go mining, I'm suggesting maybe not mine Bitcoin, but mine some of the smaller emerging digital currencies because there's still potential there. So if you see this handout, it talks about obviously some of you, who's heard of Litecoin? Has anyone heard of Litecoin? Litecoin is considered, Bitcoin's considered the gold and Litecoin is considered the silver. We've invested in some Litecoin. So some people now are buying, like you buy gold and silver as a hedge, people buying Bitcoin and also Litecoin. And they've generally been tracking with each other, but Litecoin has shot up significantly in some recent times. So Litecoin is probably the second most popular digital currency. So now you're entering into a whole new world that you're only just learning about Bitcoin. You probably didn't realize there's a whole, I think there's about 21 different digital currencies and they're now growing rapidly. Just like there would probably only ever be one Google, and the second place getters generally, who's after Google? You don't really, Yahoo maybe as search. Who's after Facebook? Well, second place, who's after Coke? Well, in Coca-Cola, you got Pepsi, so Pepsi's a fairly strong second place. So in some industries, you do get those second and third players that become fairly significant. So Litecoin is probably the most significant. So what I'm suggesting, if you want to do some mining, you might now want to look into some of these other smaller digital currencies that are becoming more active, and there's opportunities to mine some of those because they're still new. You'll see that there's listed just some of them there: Peercoin, Namecoin, Quarkcoin. There's about 21 of them. So that's what you might want to look for as mining. I'm not going to go into mining. I've never mined Bitcoin. I probably never will mine Bitcoin. I would rather buy Bitcoin. I'm doing number 2 and 3. Buying Bitcoin. I bought Bitcoin. 3, accept Bitcoin. Okay, so as companies, as you own companies or an online business, you can accept Bitcoin. So they're the two that I'm focused on. If I was to mine Bitcoin, I'd go and probably buy the mining machinery to speed it up and perhaps mine some of the other currencies. That's what I'd be doing there. Okay, that's up to you what you do on that. How do we determine the value of Bitcoin in the future? You've shared, Jamie, a lot about how it's risen in value, it's went from a few cents. For those who aren't familiar with it, do you want to just show the chart, Daniel? There's some charts there and where it's currently at today. So you can see where Bitcoin is at today. Now, if you ever want to check the Bitcoin, you can go jot some exchanges down. Our exchange is what's called 20th Century Bitcoin Exchange, but the short URL is bxe.com.au. So you just go to bxe.com.au will have the up-to-date prices on there for you, and you can exchange. If you want to buy Bitcoin, you can buy it through our exchange, or you can open up an account with some of the overseas exchanges. That will take you longer. If you want to open up an account, and Lou will go through this later with you today, if you scroll down, they've just put the order process online. So you effectively open up an account online, you'd go and deposit cash into the Bitcoin exchange bank account, or you can do an internet transfer. The reality is that most exchanges, other than the big ones, won't accept internet transfers. So there's a few in Australia. I think we're about the only one in Australia that will accept internet transfer. But you'll find in the fees, it's 4.4% in commission. And most exchanges, the bigger, not the big ones, the more local ones will charge between 5 and 10%. A lot will charge 10%. Ours is 4.4%, which is fairly competitive for a local exchange, but that's on cash deposits. If you wanted to go and transfer, a lot of people, the convenience of transferring the internet from your internet account to pay for your Bitcoins, then it's like 7.5%. People go, why is internet transfers more expensive? You'd think it'd be cheaper. It's just that there's greater risk for an exchange to accept internet transfers. Cash, there's no risk to it. So if you go and pull cash out of your bank account and put it into exchange bank account, you don't necessarily have to provide ID, etc. You can just use it. So then have to open your e-wallets. You'd email through the exchange. I've now shown proof that you put the money in and your email wallet address. And the exchange then goes and buys your Bitcoin and it delivers it straight to your address. Does that make sense? That's pretty simple. There's a little bit more things in that in detail. How do you open up your Bitcoin e-wallet? Lou will go through that after lunch. Makes sense? So you can actually physically do it today if you want to open it up. So the buying process is getting easier. That's on a local exchange. If you want to go and use Mt. Gox or Bitstamp, some of the bigger ones, they are getting, try and open an account with Mt. Gox and see how you go. At the moment, it's just basically because there's so many people trying to open up accounts, their systems are hopelessly can't keep up with demand, which is a good thing maybe for a business that's got too many clients, but they're struggling to keep up with demand. You'll pay low commissions, but you've got to get an account and you have to verify your bank accounts. They want proof and etc., which is a slow process because you've got to transfer some money, you've got to prove it. And at the moment, some of these exchanges are taking, you'll get grey hair before you get your account open, basically. So it is a little bit of a frustration. But if you just want in the short term, or anytime, you can use our exchange. There's a couple of other exchanges in Australia, which is quite simple. You can buy, especially if you're buying holding. If you are going to become a trader, Patrick will talk to you after lunch about being a trader. Of course, if you're going to be trading, just like if you negotiate with your stockbroker, you'll get lower commissions. Just like if you use our exchange for trading, they would lower the commissions for you because you're doing more volume and turnover. It just simply wouldn't be viable paying 4.4% in commissions every time if you're in and out the same day. You can still make money, but it starts eroding to your profits. If you're buying to hold, you don't mind paying 4.4%, okay? Because your alternative is to pay 10% or wait a month or two to try and get an account open elsewhere. Does it make sense? So we'll let Lou go through that later. Let's just show, can you go to that other site that has all the other site that has the bits, that has 3 or 4 different exchanges. It shows the one that, this one here, yeah. So what you'll see here, this is today's prices as we speak. You'll see Bitstamp is becoming a very popular exchange. Mt. Gox was the dominant exchange. BTC is the China exchange, which had become the biggest. They're having a few issues in the last few days. We'll talk about that. That slowed down some of their volume with some of the regulations or comments from the Chinese government, and we'll interpret those things for you. And there's another one. So what you'll notice here is see how they're different prices. So what some people have been doing, now these prices as the volumes increase will start to stabilize and become more narrow, but what some people go, why don't I go and buy Bitcoin on Bitstamp exchange and go and sell it on Mt. Gox? That's called, jot that down, it's called arbitraging, and people have been doing that. Because there's a difference in price in exchanges, they'll buy from one and make a small profit selling the other. So that's what arbitraging effectively is, and there is that opportunity in Bitcoin at the moment. Remember, Bitcoin is an unregulated market. You don't, for instance, I don't have to be licensed to give you advice on Bitcoin because it's not yet a currency. once the Australian government, if it does, and we're talking to the regulators, etc., about a framework for regulating the industry, then you'd have to be licensed to talk about Bitcoin as far as giving advice on, then you'd have to, if you want an exchange, you'd have to be a regulated exchange, just like the ASX is a regulated exchange, has to follow rules. At the moment, Bitcoin is not recognised by all the governments as an official currency. In Australia, will probably be slow. They'll wait to see what America does, like they always do. But Germany has recognised it as a currency. A few other countries have. A lot of the central bankers and governments at the moment will be having some meetings about Bitcoin going, what do we do with this? Governments would be concerned. It's a threat. It's a potential tax haven, Bitcoin. If you would accept Bitcoin, receive Bitcoin, how's the government know about that, and can the government tax it? Well, the challenge government's going to have, well, it's not, if they don't accept it as an official form of currency, then they can't really call it money and they can't really tax you for it. So they're in a double bind. It's like, well, to be able to control it, they would have to regulate it and accept it as a form of currency. Okay, but what that does is give more legitimacy to Bitcoin, which will probably surge the value future of that. So now they don't want to see it grow too fast because it could be a threat to their tax revenues, it could be a threat to their power base, and because remember, those governments in the Western world are heavily controlled or influenced by the private bankers. So they'll be having a lot of meetings, have been for the last month or two, to decide what should they do with Bitcoin. If they go too heavy-handed and go, well, let's just try and stamp it down, shut it down, what do you think that will do to a lot of people around the world? Do you think it will incite revolutions, yes or no? It's likely to make it even more popular because people don't like being told what they can't do. And you can't technically stop people bartering between each other. If we want to exchange something in Bitcoin, then how do you legally stop us exchanging that? You legally can't. All they can do is around the edges and try and restrict, like the Chinese government's just done, is that through BTC, that the Chinese, they can't pay deposits of yuan, the Chinese currency, at the present in the last few days to get Bitcoin. Now, some people have interpreted that, and that's why we've seen a drop. Bitcoin's went from a few cents. A year ago, it was about $10 or $12 a Bitcoin. Then it increased with the Cyprus. When Cyprus in April, it was around, it grown to about $100, $120. It shot up to $260 after the Cyprus crisis. Then it dropped back down to 120, and it's been fairly, stable for that time. And then something happened about 6 weeks ago, I believe, when was that, late October or whenever, that Bitcoin took off from 120 and within the space of 3 weeks went all the way up to $1,250. I mean, a massive increase. And that's when you started to hear about it in the news, because all of a sudden Bitcoin had landed, it had become significant. Also, it made a lot of people incredibly wealthy. So, and you can see there, so what made it spike and take off? You want to understand, in markets, simple comments can make something take off. What happened is a US Senate inquiry on digital currencies, and some of the things were said quite positively, that said, yes, it is a legitimate form of currency. In other words, if they come out and said, we're going to decriminalize this and anyone touches it, we're going to send to jail, then that would have had a different effect on it. The fact they said it's a legitimate form of currency, that one shot it up. Ben Bernanke also spoke positively of it. He said, it has some positive, I can't remember to paraphrase the exact wording, but effectively it has some positive ramifications and we should watch it, which was surprising from a central banker. So those things drove the price up, and a few other countries had accepted it as a legitimate form of currency. So those things affected the price. And then as more and more people heard about it, more and more people started buying Bitcoin, and that's kept the price up. What's happened in recent days, it's all been all over the place, but China has come out and said that, it depends how you interpret it. China hasn't banned Bitcoin. A lot of people, I did a Sky News interview a couple of weeks ago, and one of the questions I was asking was about, why do you think China's openly supporting Bitcoin? I said, I think long-term China's supportive of Bitcoin, allowing it to really get momentum, particularly in China, is because China wants an alternative form of currency in the world because China holds large reserves of the US dollar. And it's sort of concerned about the US Federal Reserve continually printing money, which most of the world is concerned about, exporting inflation around the world. So China does want a new form of currency. And the US is a reserve form of currency. You've got to understand is that if Zimbabwe just prints money as it has, the Zimbabwean dollar was equal to the US dollar before Mugabe got his hands on the printing press. And what you've got to understand is that if you study history, and the history of money is this, that any time in civilization, going back to the Roman days as well, that they've devalued their money and taken off a gold standard or some sort of silver standard and then just started printing money, it's always led to a crash of the country or the currency. In the Roman Empire, when they first had money and issued silver coins, the portion of silver in those coins was something like 99.9% of the coin was actual silver. By the time the Roman Empire collapsed, they had diluted the amount of silver, like backing in their currency, in their actual coins, to 0.02%. And that was one of the reasons to fall the Roman Empire. In other words, fractional reserve banking, just inflating money, eventually leads to a collapse. People see that the correlation with the US Federal Reserve has been printing and printing money. You can only do that for so long, and that's why you have a large amount of people in the world concerned about that, and that's what's driving also Bitcoin and digital currencies, because they're anti-inflationary. In other words, they can't be printed off relentlessly. If you look at any other throughout history, the French have done it, went to printing presses and destroyed their countries in the past. Germany, you remember after the World War I and World War II, what happened to the German mark by the printing of money, hyperinflation, destroyed the value of that, people lost everything. So time and time again, in any country that's tried it, running the printing presses, eventually they will destroy their entire economies, okay? Now, the US has been able to do this since World War II, and I think, when was it they moved off the gold standard? It was 60s or 70s. Is because US, unlike Zimbabwe, if Zimbabwe prints off millions and millions or billions of dollars of Zimbabwean money, outside of Zimbabwe, who wants Zimbabwean dollars? Does anyone want it? There's no demand for it. Actually, even in Zimbabwe, who wants it? No one. So if you print something there's no demand for, it creates hyperinflation. The US, though, has been printing for 50 years or 60 years. Why can they get away with it? Because everyone else, it's a reserve currency. So everyone else in the world uses US dollars. So we take it. So what they're able to do is export inflation around the world. It doesn't hurt them so much. It hurts the rest of the world. It hurts China particularly because they're one of the largest holders of US Treasury notes. Does it make sense? China is concerned about that because if US implodes or keeps on printing money relentlessly or irresponsibly, then it's going to risk China's reserves. So China, as a nation, wants an alternative currency, just like Russia does, that can become a reserve currency to compete one day with the US dollar. Now, there has been many comments, if you read articles coming out, that Bitcoin could potentially destroy the US dollar. Now, it's probably early days to suggest that right now, but Ron Paul, those who are familiar with Ron Paul, US politics, he even come out and said that it has the potential to do that. So we'll see what happens, but a digital currency that's left unchecked could completely undermine the total power base in the world. It could be one of the greatest wealth redistributions of wealth on the planet we've ever seen. Money flowing to a new emerging rich class would have a lot more power. So all these things can change society a lot. So of course, the governments and central bankers are very careful to see what they can do about it. Now, what a lot of people don't understand, as much as the banks would like to influence the world and control the world, is no one actually does control everything in the world. Does it make sense? So we say, why don't they just shut down Bitcoin, etc.? Well, can they just do that? They can try, but they don't necessarily do it, because at the end of the day, people can do what they want. Now, the other thing people will say is, well, Bitcoin has no intrinsic value. Well, what intrinsic value does the US dollar have, especially if it's printed? You know, people say, oh, well, it's backed by the US government. Well, that doesn't help me sleep at night, because if you know the US government is bankrupt, you know what I'm saying? So the reality is, what intrinsic value does a piece of paper have? And other than backed by a government, and most governments are broke in the world, it has very little intrinsic value. Does it make sense? Well, what about gold? Gold has intrinsic value. Well, yes, as the Wall Street Journal reporter said, at least you can make a gold watch with it. But the reality is, gold a lot of people think gold is rare and therefore it's valuable. Gold still is only valuable if we perceive it to be valuable. Does that make sense? Any monetary system is only valued based on the perception if we agree it has value. So just yes, like Bitcoin, people say, oh, it only has a value, it doesn't have intrinsic value. Well, it has value because people give it value, just like the US dollar does. If confidence is lost in the US dollar, it will go down in value. If confidence is lost in Bitcoin, it will go down in value. There is no difference there other than it's not backed by a central control bank, which most of them are just printing money anyhow, it's just fake money. It's not backed by a government. Most governments are broken and bankrupt anyhow. It's all perception, making sense? So that's how you deal with that. If Bitcoin, you've got to understand this. If you're to buy Bitcoin, let's look at some of those things now. Let's say Bitcoin was still $1,000. You've seen up there, it's just under 700 at the moment. It's been up to 900, up to 1250. So let's say it's $1,000, keep the numbers, fine. If you buy Bitcoin, can it go to zero, yes or no? Yes or no? Yes. It can go to zero. It started off at zero. Probably less likely now because it is becoming more resilient, it's becoming more accepted. But yeah, if they can try and shut down Bitcoin somehow, it could go to zero. Okay, so if you were to buy it at $1,000 goes to zero, you've got to accept that you could lose all your money. Does it make sense? So I'd make it, if you're going to be an investor in Bitcoin, I would certainly suggest that unless you should only be buying Bitcoin with money you can afford to lose. Make sense? Jot that down. As an investor, you should only be buying Bitcoin with money that you can afford to lose. Because we'll go into looking at how do you profit from Bitcoin, and I'll share my views on that before we have lunch, and then we're going to hear from Patrick about trading Bitcoin after lunch. So the way to look at it is this. It's got to say, well, what is its market cap? If you were to buy, here, jot these down. These are some reasons why you might buy Bitcoin. One, as a hedge. Just like you buy gold. What you understand is there's gold, there's 8.6, jot this down, there's something, 8.6 trillion. I'll check the exact figures. I think we have it there of gold. Can we put that slide up? Of gold that exists on the planet. And because this is going to lead into how do you value what a Bitcoin is worth. You put the comparison, but there is a figure I have somewhere. Let me check. Yeah, 8.9 trillion there is of gold on the planet that's known to have found, that's stored. But let's look at gold, Bitcoin versus gold. So if you were to buy, one reason you might buy Bitcoin, one reason I invested in Bitcoin as a hedge. If there's a banking collapse, I'll give you an example. I was sharing on Sky News that I sold, a couple of weeks ago, I sold $35,000 worth of gold. Gold had been declined, I believe it's going to go down, so I'll sell it. And I'd bought some of that gold as a hedge. And I said, and it was that particular gold I'd bought a couple of years ago. And I said, and I sold it, I got $23,000 back because gold's declined. I was saying to the Sky News reporter, ironically, if that 2 years ago I ever had it to put that $35,000 into Bitcoin as a hedge instead of gold, that would be worth about $4.6 million 2 years later. So when you talk about a hedge, is that a good hedge, yes or no? It's a very good hedge, because a hedge means you're investing not to make money, you're investing just in case the world goes to crap, the banking systems collapse again like they nearly did in 2008, and you've got something outside the banking system that can be valuable. Okay, that's why people hedge in gold, because if anything crashes, gold will be worth a lot, or you've got something there, which is a good idea. I mean, gold is still probably worth having some gold and silver as a hedge. And a lot of people now investing in silver because they believe silver will be the one that will take off. So Bitcoin, is it a hedge? Well, the reality is yes, I believe a lot of people are hedging just in case. Bitcoin did take off. Even the people that are skeptics, and even total skeptics and pessimists, some of them will be buying Bitcoin. They just won't be telling anyone about it, okay? Because they're pessimists and they're saying it's going to go down. But, and it's also a lot of people are, a lot more people are buying it, but they're just not telling people about it. Where other people are happily buying it and telling people about it because they consider it cool and trendy, because everyone at parties are talking about what's his Bitcoin. And if you have Bitcoin, you're like ahead of the trend. So there's different reasons people buy it. But as a hedge is one reason you might buy it. Now, if enough people in the world decide to put a little bit as a hedge into Bitcoin, what can Bitcoin be worth? That's what we're going to look at. But first of all, let's compare it to gold. Number one, definite owner at time of holding, yes, they both had that. You own Bitcoin, you are the title holder of that, you have it in your e-wallet, just like if you buy gold from the Perth Mint, they can store it for you, or you can have it at your house. You have it at your house, it could be stolen. Just now, they say Bitcoin, it can be stolen. Yes, hackers can attack, so if you have your Bitcoin, you don't store it on your hard drive, connected to your computer, connected to the internet, because hackers can get in via the internet into computer and try and steal your Bitcoin. So you just, there's simple things that where you store your Bitcoin to keep it safe. Like the Winklevoss twins, they're $11 million of Bitcoin. They have it on different disks and stored in 3 separate safety deposit boxes, 3 separate banks. That way it's protected. If one bank burnt down, they still have the other 2 copies of it. So it's like anything valuable. You're not going to leave $100 million lying around like Sheep Market did in that exchange and lose $100 million of Bitcoin. That would be quite a depressing day. Especially when you can't get it back and you can't even go after someone because you don't know who's got it. And you can be as angry as you want, but you're not going to get your money back. And that 100 million's already gone. They tracked it and it's gone to an exchange and been sold. So if you come across 100 million Bitcoins, you probably want to convert them to cash very quickly. And they're able to convert them to cash very rapidly. That goes to show the liquidity that exists in Bitcoin. Hard to mine, yes, it's getting harder to mine Bitcoin. And gold is, gold, you think mining Bitcoin's expensive, try mining gold. Number 3, limited resource. Yes, both are limited resource. Even though in saying that, though, the reality about gold is a lot of perception. There is a lot of gold on the planet. It's a lot of this. Same with diamonds. People think diamonds are rare. Diamonds are not rare. There's diamonds everywhere. It's just that they buy them, the biggest diamond companies, and stock them away to make them seem rare. And then, they tied in the marketing around, like, if you love a woman, you'll buy her a diamond. I mean, brilliant marketing. Okay, I mean, if you love a woman, you'll buy a diamond. So women like, well, do you love me or not? You know what I'm saying? So all of a sudden that is a piece of, whatever in the ground is now worth a lot because it means love. If you love, the bigger the diamond, the more you love. So if you study the history of marketing of diamonds are not rare, and but they once again, it's perceived value. A diamond's worth something, okay? But you buy an expensive diamond ring and then try and go and sell it. You won't get probably half what you paid for it, true? Because it's all increased retail inflation value. 4, can't be copied. That's true, both of them. 5, easily divisible. What that means is that some people go, well, if Bitcoin's $1,000, what if I just want to buy a hamburger with it? Would I have to chip off a little bit of my Bitcoin? No, it's easily divisible. You're doing parts of Bitcoin. So it doesn't matter if Bitcoin goes to 100,000 per Bitcoin, you can still buy things for $1 with Bitcoin. It's divisible. Where gold, it's a little bit harder, It's easy to transport, secure, and hold. Certainly Bitcoin is. Gold, well, you don't lug it around. Bitcoin is a digital currency. Gold is effectively a physical form of currency. Makes sense? So let's look at how do we determine the value of Bitcoin and why we would buy it. One is a hedge. The other reason we'd buy it is, so we're buying it just in case something goes wrong. So would you agree there's a lot of people on the planet that be prepared to buy Bitcoin just in case the banks collapse or just in case gold collapse, just in case worst case scenario? Raise your hand if you think a lot of people would be willing to do that. And if only 1% or even 0.0% of the world's money moved into Bitcoin for that reason, would that mean there's a lot of money going to Bitcoin, yes or no? To give you an example, the valuation, this is how we're now going to determine what is the value of Bitcoin. Now, there's a recent analyst for one of the Wall Street banks come out, it's in one of your handouts there, that did the first analyst report on Bitcoin. It made the news, and he said that Bitcoin is worth he says it has a great future, digital currency. If it gains traction, it can have a very successful future. He said Bitcoin is worth about $1,300, just like they'll do an analyst report on a particular stock. He did one on Bitcoin and he says the fair value of Bitcoin is $1,300. What is it today? What did we say? Daniel, you want to put those prices back up? I think it's 673 to 700 today is where it's trading at. And you'll see they can jump up and down all day long. At the moment, it is trending down, because people are trying to digest the news. So what determines the price, and so when we look at, is you got to be able to digest the news. What does it mean? So when an article comes out, and this is where the media can manipulate things or sensationalize things, you have to be able to read through what's fact, what's fiction. What does this mean? A sophisticated investor, so when I see it, like some people were showing, there was articles come out last 2 days that, Bitcoin's crashed 50%. So these sensational headlines, I thought, wow, it must have dropped down a lot. I went and read it. And yeah, technically it's crashed 50% from when it was 1250, but in that day or two it only dropped a small amount. So it's almost was misleading until you read the actual details that actually hadn't only dropped down because of what China did, and the market's trying to interpret what does that mean. Is China going to ban Bitcoin? That will drive it down. But when people read into it more and then more reports come out and go, well, hang on, China isn't going to ban Bitcoin. Actually, it could what was seen as a negative could now be seen as a positive, because if they wanted to ban Bitcoin, they could, but they haven't. They just said financial institutions can't trade in it, and they've given a warning to people that you can. They've said explicitly, yes, you can use Bitcoin, but it's risky. Therefore, they have to, as a government, give a warning to their citizens. Otherwise, if people go and speculate and drives it up and they lose their money, then they're going to blame the government. You know what I'm saying? Because people blame someone. So they're giving a warning that it is risky. And yes, it is volatile. So that other thing is at Baidu, or what are the big eBay type site in China, they stopped accepting, they were using Bitcoin, they stopped accepting it for an interim period. A lot of people read that as, oh, now Bitcoin's all over. And that's what started to send Bitcoin from $1,250 down towards the $600-700 mark, making sense? But now they're looking at going, hang on, that company said they didn't stop it because the Chinese government told them to. It had nothing to do with that. They just said it's volatile at the moment, so for our customers it's not a good idea to be using Bitcoin because its price is moving too rapid. We're waiting till it stabilizes more, then we'll start accepting again. So when that non-user is understood properly, people go, well, that's not necessarily a bad thing. So China's come out, and also they haven't banned Bitcoin. Many people believe China is just trying to slow it down like they do on their property market. If their property market overheats, they put regulations on to try and slow it down. At the moment, they're probably going, well, we can't let this get too big too quick until we can understand what does it mean. Also, what China's concerned about is the Chinese are very wealthy, many of them. They're always continually trying to get their money out of China in case the Chinese government regulates and clamps down on property or even the yuan. So the idea of clamping down on Bitcoin is no different to clamping down on their own currency. They do it all the time. They try and stop the outflow of money going out of China. A lot of wealthy people going, Bitcoin's brilliant. Let's go to the exchange, cash our yuan, get Bitcoins, and then we can get our money out of the country. That's what China's trying to slow down, because China doesn't want to run on that. So you got to understand governments have to watch all this. It's just like if you had a business, you don't want something to come along, an emerging threat, and destroy your business overnight and not pay attention to it. So I think they're just putting it on pause. They're just, let's slow it down. Let's not let it get too big. I think they're quite positive, really. They can see it can be an alternate currency to the US dollar, which means that's why they're probably letting people use it. And then they'll see how it can work, and then they might become, the regulation can be seen as a good thing because it just controls the market. Making sense? So it's all a matter of interpretation. But what you'll see, Bitcoin, I think, I don't know how low it did drop. I think it dropped to the high 400s. It was one of its lowest points. But it's incredibly resilient. So even when you hear it drops, before you can even often go and buy it, it's heading back up again. What it suggests is there's still a lot of resilience in Bitcoin. Now, people that write sensational headlines that it's crashed 50%, they're kind of forgetting that a month ago or 6 weeks ago, it was like $120. So if you own Bitcoin and it's gone from $1,250 down to $693 and you bought it at $120, are you particularly worried? You're not like, or you bought it at $12 a year ago. You're like, Bitcoin crashed? Well, not really. It's still worth an absolute fortune. And you expect something to go so high, you do expect to pull back anyhow. So no one should be really surprised about a pullback. Where it will go from now is no one knows. No one has a crystal ball, but I'll share my interpretation. That's what we're trying to look at now. How do we value Bitcoin? Because if you haven't bought any yet, should you buy it, and when should you buy it? Should you wait till it pulls back more? Or how do you go about getting into the market? These are all things that an investor has to look at. So Wall Street analysts have said 1,300 is fair value. The Winklevoss twins addressed a conference a couple of months ago when it was only 120, and they made statements at the time that were considered outrageous. They said that we believe Bitcoin could go as high as $10,000, up to $35,000 is what they believe it's worth per Bitcoin. At the time, they were mocked at the conference for saying ridiculous things, but now when we've seen Bitcoin go to 120 to 1250, some of those journalists that mocked them have had to eat their own words and say, now actually it's the idea of Bitcoin going to 10,000 one day is not so unrealistic now, it is actually possible. So it's really up to what you think. Wall Street saying analysts $1,300. In the short term, that's probably true. What I would say is this is how we're going to determine what it's worth. So jot this down. What we're going to use is what we do on the stock market. We're going to look at the market cap. So the market cap might be a new word for you, for some of you. If you're into stocks, you know what market cap means. A market cap is short for market capitalization. What is the total value of a stock or a sector? Facebook, can anyone tell me what is the market capitalization or the market cap of Facebook roughly right now? No one know? It's about 120 billion. So the total value, the total market value capitalization of Facebook is 120 billion, because what you add up how many shares they have times the current trading price of the share, that gives you total value to buy Facebook completely in one go. That's what it would cost. So what is the market cap of Bitcoin? Bitcoin market cap, and you can work it out. There's about 12 million Bitcoins in circulation, and let's say it was $1,000 per Bitcoin to make it easy numbers. That would mean how big would the market cap of Bitcoin be? 12 million Bitcoins in the world by $1,000 per Bitcoin equals how many billion? To get rich in Bitcoin or anything, you have to be able to add up rapidly in your head. It's a very good skill. Take a guess. It's in the billions. 12 million times 1,000 equals how many billion? 12 billion, correct. So its market cap at 1,000 is $12 billion. It's dropped down to what, 700, say. It has a market cap of probably $7 odd billion currently. Does it make sense? That's its market cap. Why is that important? Because you've got to determine, is it a good time to buy Bitcoin now, or what price should you be buying Bitcoin at if you missed out buying at 120, or if you missed out buying at $12, or if you missed out buying at $1? Okay? Then is it an investment? Now, if you're buying it as a hedge, you probably don't care. As a hedge, you just go, I'm going to put 5 or 10,000 in as a hedge, or whatever your portfolio you can afford. And I don't care what price, because I'm not buying it for a profit. I'm just buying in case things turn bad, I have some money outside the banking system. Okay, so that's just a hedge, and we know a lot of people do that. If you want to buy it now as a buy and hold strategy, not a trading strategy, we'll cover that after lunch, but a buy and hold strategy to go, well, what price will I buy it at? Now, so the market cap, let's say it's 10 billion to keep figures fairly simple at 1,000, let's say even at 800 it'd be about that. So that keeps figures. So is that very big in the world of money, yes or no? Facebook, just a single company in the world, is worth 120 billion. BHP, from memory, is worth, I can't even check, someone can confirm, but I think it's over $150 billion market cap, BHP. Apple was the world's most valuable company, and I think it got up to close to $600 billion in market cap. It's down to probably 350, 400 at the top of my head at a guess. So just single companies, let alone an industry or a sector. Gold, so let's give an example. It's been compared to gold. How much did we say is in gold? 8.9 trillion known gold reserves. If you say that's the market cap of gold. So Bitcoin is basically, at the moment, there's only if you went to St. Kilda Beach and picked up a grain of sand. That's about all that's in Bitcoin compared to the world of money. So if you understand that, you can start to go, let's think about this. If Bitcoin's only $10 billion today, what is its future market cap? Because that will determine what its future price per Bitcoin is. Making sense? And I would say that the chance for Bitcoin, BHP, they're 173 billion market cap. So the total amount of money in Bitcoin is like 5.5% of the total amount of money or the value of BHP. So you can see how tiny it is. But how well known is Bitcoin now? It's the top 10 most searched items in the world. It's becoming very well known. There's still a lot of people don't know about Bitcoin. So let's say half the world, let's say 40% of the world has heard something about Bitcoin. That means a lot of people haven't even heard about Bitcoin yet. So you say, as more people hear about Bitcoin, what's that likely to do to its price? Up or down? Up. As more and more merchants start accepting Bitcoin, what will that do to the price? Up or down? Definitely would go up. Okay. As more and more people go, shit, just in case it takes off, what will that do to the price? Go up. As more and more people move into trading Bitcoin, what will that do? More demand, so it'll probably create more volatility. If more people come and go buy and hold, what will that do? It will certainly go up because a lot of people buy and hold don't want to sell. There's a lot of people not selling it. Why would they sell at 600? Some would be taking profit. So we'll look at how to do that. So let's say the market cap, this is 10 billion, we're basing on $1,000 per Bitcoin to keep the figures simple. If the market cap went to 100 billion, what would that do to the price? So this is gold here. So let's say the market cap rose to 100 billion. The price of Bitcoin would then be, assuming there's still around 12 million mined, what will be the price of Bitcoin? 10 billion to 100 billion is times 10. 1,000 times 10 is how much? Bitcoin would now be worth approximately $10,000 per Bitcoin. Is it unrealistic in the world of money for 100 billion to be moved to Bitcoin, yes or no? It's quite easy. That's like maybe, not even the whole beach in the world, of money. There's the amount of trillions and trillions of dollars that exist in the world that are sitting somewhere. Now remember, Bitcoin's a form of currency. It's not like it's not like it's an expense. If you move some of your cash to Bitcoin, all you've done is it's another form of cash. Does it make sense? More volatile cash, but you're going, well, I'm just hedging or I'm speculating. It could go up to 10,000 or could go to 1,000. So if you were a speculator, this is how you would look at it. You would go, okay, if I buy Bitcoin at $1,000, even though now you can buy it well below that, and my downside is it can go to zero. True? So if you're willing to have the psychology of a speculator and accept that you're speculating, then you go, okay, I'm speculating. I'm willing to risk $1,000. I'm willing to risk $10,000. I'm willing to risk $100,000 on my portfolio, whatever level you're at. And it goes to zero. Should I cry? It's pointless, but you go, well, I accepted that up front before I did it. I was willing to take that risk. Now, the reality is now, as Bitcoin's life extends, people going, well, it's probably less than likely to go to zero now. It has some sort of credibility, but people don't know what's going to happen with it. So it could go to zero, but it's probably not likely. If it was going to go to zero, it might have went to zero by now, but it hasn't. But if it could go to 10,000, you go, well, my upside, if I believe it can go to 10,000, is my 1,000 go to 10,000 or it can go to zero? Who's happy to take a bet like that? Because now you can see the bet clearly and go, 10 times my return potential, but I can lose my money. If I'm willing to take that bet, then you can afford to speculate and then you can sleep at night. It's not bothering you. Then you can also make a decision, does it make sense, about what you should do. To fit your risk profile, because everyone has a different risk profile. What you don't want to do is join what people, the get rich crowd, what they will go is, oh my God, I'm going to get rich out of this and I'm going to borrow $1,000 on my credit card and buy some Bitcoin, and because Jamie said it might go to 10,000 and hopefully it does, and because my last $1,000, if it doesn't, I'm bankrupt. That's a different, type of investment, okay? If we look at it so the way I look at it is I go, I believe it can go to as much as 100,000. $1 trillion market cap, if it becomes widely accepted over time, is not impossible to occur. Will that ever occur? No one knows. We don't. There's so many volatilities, but if I'm going to risk $1,000 for every Bitcoin I buy, that could go to 100,000. The upside is enormous. The downside is minimal. If I'm happy and comfortable with that risk, then I'm prepared to take that bet. Does that make sense? As a speculator. But if I'm adding to that going, well, hang on, I'm happy to take some of that as a hedge, therefore I don't care if it doesn't go up, as a hedge as well, then that's the other scenario behind it. Now, of course, what you might do Okay, first of all, turn the person next to you and share with them how many Bitcoins would you buy if money was no object?
Yeah.
Does anyone have any questions at this stage?
We just have a question before.
Yep.
When I give that lady $5 note, she can tell whether that is real note or fake note.
We'll say that again, sorry.
When I give her $5 Australian note,
Yep.
she can tell me straight away whether it is fake or real.
Yep.
Right. But if I give her a Bitcoin now,
Yep.
and how could she know whether it is real or fake?
Okay, it's a good question. So generally Bitcoin, you can get Bitcoin, well, they'll put your code into a physical Bitcoin if you want, but most Bitcoin, it's done online. So I won't go into the technicality, Patrick or Lou might cover that and show how it works, but effectively it's an open source system. So your logarithm or of your code or like a bank account number is connected. So all transactions are verified on what's called a blockchain. Okay, and that's part of the problem with this. The blockchain is getting bigger and bigger, so every transaction is recorded on the blockchain. So if you buy it off someone, it verifies that they actually have that, and it goes to you. And if you buy something or parts of it, so it's all adding to this blockchain. So it's verified, so you don't have that counterfeit worry. If people getting physical Bitcoins, there people are printing them, certain places are producing them, and it just it's linked, there's a code in it linked to online, which is verified. So yeah, they've covered that. So that's probably one benefit, is that there isn't counterfeiting, where in real money, you can accidentally accept counterfeit money. Any other questions? Yeah, we'll just get the microphone so we can record it through the camera. And then, as I say, we're going to have lunch shortly.
What do you think, is there any credibility in the Channel Islands producing $500 gold Bitcoins?
Yeah, certainly. I think they come out with the first nation to use Bitcoin. They're going to use Bitcoin as their national currency, to my knowledge, is what I heard. So, that's up to them if they're happy to do that. I think there's some credibility in that, and there's credibility as more and more people accept it around the world. I think Bitcoin's gone past where it didn't have credibility. Now it's gone into the big league, and it's like, well, it's got to mess with the big boys and see how it will last. But that's why I keep coming back to the word with Bitcoin. It's very resilient. If you've been following Bitcoin for a while, you'll see that things that should totally smash and destroy it doesn't, and it seems to bounce back in price very well. Which means there's an underlying demand and there's undermining. And also that's why I talked about those are the libertarian views. There's a large amount of people that will support Bitcoin regardless of it as an investment, but just because they support the ideology behind it. And when you have something that's a strong ideology support, it'll be far more resilient than if it's just a tulip boom that has no real intrinsic value and is a clear bubble. So the other question people often ask, is Bitcoin in a bubble? Well, I think people that say because it hit 1200 it's a bubble, most people that have been, I've read reports that have been overly critical of Bitcoin, generally they don't have a lot of credibility. I've never seen a solid, but they just don't have a solid argument behind it. Very few people have. They need to have a solid argument. Otherwise, it's just speculation, conjecture, and they know a little bit about it, and they want to write and get traffic writing about something they know a little bit about. Is it a bubble? Well, I think what we went through here sort of debunks that. Is it possible Bitcoin could go to 100 billion market cap and be worth 10,000 each? It's more than realistic that could happen. Could it potentially go to $1 trillion market cap? If it went to $1 trillion and Bitcoin's 100,000 or close to that each per Bitcoin, $1 trillion is nothing out of this world. I mean, that's only a small alternate currency. That's not like a major player even. That's not like a significant currency. That's just a small niche accepted alternate currency in the world at $1 trillion valuation, knowing gold is 8.9 trillion. So the potential for it to get that much in value over time is certainly realistically there if you looked at it from the bigger picture. But if you just come in and look at it from 120 to 1250, know a little bit about it, don't understand the ideology behind it, don't see it's a potential revolution, it's a change, a disruptive technology, then you go, oh, it sounds like a bubble. Of course it can pull back, etc. But to say it's a bubble, I think that shows a lack of awareness of what it really is. Did you have any other questions to add to that? No? So of course, if we're investors, we're going to look at it differently. Now, the thing to jot down, I'll go through this quickly. Those who follow 21st Century, if you're members and follow what we teach as far as investing, is that we have, I want to jot this down, we talk about the baby bucket principle. And this is what effectively asset allocation. So if you're going to be investing, one way is that the key to becoming wealthy is the sooner you get yourself in a position where you can afford to lose some money, is the sooner you become wealthy. And because if you can afford to lose some money, not that you want to lose money, no one wants to lose money, but if you can afford to, you're less emotionally attached to that and you're more likely to succeed. So what we do with the baby bucket is pretty simple as this, is that we have a group of, where we allocate our money. The first bucket is what we call security. So it's more, we might put in here cash. So money in the bank, maybe even superannuation was sitting in cash, your insurance policies. These are just basic, you're not expecting a high return. So it's low risk investments, but what sort of return? Low as well. You're not really investing for a return, okay? The second area that you might invest is what we call growth. So growth investments are what you might say medium risk, but medium return. So you're getting a higher return. So in here might be houses. You might buy residential houses as an example. Your managed fund maybe, but it's a solid managed fund. You've got more growth assets, okay? Then the next level up is what we call, jot this down, it's called momentum. And what this is critical, momentum investments are higher risk, but higher return. So in here, you're going to be doing maybe derivatives trading. You might be doing, as options, or you might, for commercial property, for some people, might be more of a momentum because it's a little bit riskier. US property might be as an example. If you're investing in US property, it's not like buying around in South Melbourne. So that'd be momentum. So where would you put Bitcoin? And the first one, I'll just finish the last one, is lifestyle. So the last bucket is lifestyle. So that might be you want a home in the snow. Okay, you want a chalet in the snow. You're buying for a lifestyle. You want a farm, hobby farm. They're lifestyle investments. You're not really buying them for money, okay? So which one of these do you think Bitcoin fits into? Cash, growth, momentum, or lifestyle? Take a guess. Momentum, yes. Because it's high risk, higher return. Makes sense? So Bitcoin is certainly in a momentum investment. It's certainly a speculative investment. Now, you might be hedging and putting some, technically here is a hedge. So you're hedging, which is more security. You're buying not for profit, you're just buying to put some aside. So that certainly could be part of there. But the rest is really, it's a momentum investment. So as long as you understand that, as I said, you'd only invest in Bitcoin, I would say, as an investor, if it's money you can afford to lose. It is still very volatile and quite risky. But as you learn more about it, you go, I'm prepared to take that risk because the upside is fairly significant. The downside is not. Now, let's say all it ever recovered to, you bought it at $650 today. And then it does hit, all it ever hits is $1,300, the market value that the Wall Street analysts and some of them are saying it's worth. You doubled your money, even at that. Who'd be happy with that? You don't. I mean, you compare to, after studying Bitcoin and the enormous returns, it makes stock trading look very boring. It makes a lot of investments look very boring because the returns are so low. But of course, it's speculative. But there's enormous opportunity. So if you're an investor, the other thing what you would do is two things you got to be aware of to be smart is if you if you bought it, say, $120 and then let's say it went to $1,200, and let's say you put $10,000 in here, $10,000 at 120, at 100 when it went to $1,200, sorry, it was worth, your 10,000 now was worth what, 1.2 million. Make sense? So if you bought it 60 days ago even, $120, and then went to $1,200 or went to $1,250. Is that right? 100,000. Too many zeros? 10 times. So you got 120,000, okay? If you'd bought 10,000 a year ago, you'd have 1.2 million today. So you got 120,000. Could have you, as it started to rise, gradually sold out $10,000 worth as it's gone up in value, or even then, could you now go, I'm going to cash in 10,000 of my 120,000, therefore I've got my money back. Now, can I lose any money, yes or no? You can't lose your initial investment, you've got it back. So that's one thing that smart investors have done with Bitcoin. They've put a small amount in, they made the money back, they've got their capital out, or some might say, I'm going to double mine, only take 20,000 out, or whatever, and let the rest run. Then they don't care what happens to the price, they can sleep. They don't care if it's went from 1,200 to 673, because they're like, well, I've already got my money back, or double. I'm happy to ride it because I believe long term, they're not a get rich quick, not trying to make it short, but long term it's going to be worth 10,000. They're happy to sit there because they can't lose. Making sense? Is that smart or is that smart? That's a simple way, what you look at as your strategy. That's what you should be considering in your investment strategy to do that. Now, the other way is what's the words? We use it, dollar cost averaging, I guess is the word we use in the stock market. So what you can do, you go, well, some people go, I'm just going to wait till it gets really low again, then I'm going to buy. And often they miss it because, let's say this is the lowest it goes as an example. And you go, I was going to wait till it got to 300 and then buy it. And now it's gone back to 1,000, you missed out. So what you can do to overcome that is you can, I guess it's the staggered approach. You stagger your investments. You don't know what the high and low is. You don't know where you're going to pick it from. So what you do is you go, okay, well, I'm going to start buying, let's say you've got 10,000 to invest. You might go, well, I'm going to invest, 2,000 now. And I'm going to watch the price and I'm going to buy another 2,000, another 2,000, and you stagger your positions in. So you might end up getting some at 650, you might end up getting some at 700, some at 750, some at 800. Does it make sense? So you've got different, but you're dollar cost averaging. You're able to stagger your way into the market as opposed to waiting, I'm going to wait till it goes to 300, and it doesn't, say as an example, and then you've waited, and it's gone to 1,000, and now you have to buy them all at 1,000. Do you know what I'm saying? At least you've got them here. You've staggered dollar cost averaging, and you haven't missed out. Or if it went down this way, you're buying 650, 550, 450, 300. You staggered your way in, so then you might go, well, shit, I'm going to build. So we have a lot of people, like when it's going down, don't buy. Okay, it's up to you to predict the market is, but you don't want to be greedy. You've got to be in the game to win it. True. And a lot of people are like, oh, hindsight, or it's great. Yeah, of course it's hindsight to say, yeah, you bought it at 120. Okay, but when it was 120, people didn't know it's going to go to 1,200. When it's at 1,200, people don't know it could go to 10,000. If it goes to 10,000, people don't know it can go to 100,000. Do you know what I'm saying? It's always, you have to be able to make a decision that you don't know the future at that point in time. So that's one way, is staggering your approach into it, and then you are simply pulling out your profits. Then you're playing with profits, and you have no emotional attachment, etc. And you don't beat yourself up. Give it 673 now, and you I could have sold and got 120,000 at 1,200. Now, technically, you can read the market and become a trader. What Patrick will talk about after lunch is you could go, I could cash all in here because I think it's going to go down, and then you could buy back in. But that's now you're becoming a trader rather than a buy and hold. So you've got to say, what is your strategy? Are you a buy and hold, or are you a trader? Or you can do both. So what I do, I'm predominantly a fundamental investor. So even in stocks or in anything, why I like property is because property is a buy and hold. It's like Warren Buffett says, if people were to invest in stocks or companies, like as if the stock market's closed for 5 years, that they can't sell, they'd be much better investors. So in property, we can make money because it's like a 10-year plan. We buy, and in 10 years it should double, and another 10 years it should double. So we have that long-term view, and as a result, we tend to make a lot of money from that. If you applied that to stocks or other things, you can often make a lot of money. But then you can also go, well, I'm going to have a portion of my money is buy and hold. A portion might be hedging that I don't care, and another portion might be I'm going to trade. And then you can be using that to get in and out, and then you don't care if Bitcoin never goes above $1,300. If it just goes 600 to 1,300 up and down, you can make, by what I covered before, is channeling. So let's say it's 650 today, and let's say the range goes up to 1,000. and it just goes this. Now, the good thing with channeling is this thing channels this by the hour, sometimes by the day. So it's massive channeling, where sometimes I talk to a strategy in stocks where sometimes it might take a year for a company to channel like that over a year. Here, you can channel a lot. So you might be buying, selling, buying, selling, buying, selling, and you don't care the long-term value of Bitcoin because you're happy to go there. So Bitcoin's probably moved more from rush up where you get in because it's going to go up short term to now becoming more of a trading type thing because it is moving more to clear price patterns that are becoming a little bit more predictable, even though it's in the short term it's up and down, but it is following a pattern that's starting to evolve, and more people can start to follow that. And now as it goes longer, the news that comes out starts having less and less effect eventually. At the moment it's having a lot of effect because people are unsure, they don't know what's going to happen. That means it has massive potential upside, okay, and big downside. But as more and more confidence comes in, that upside will start to lower and the downside will start to lower, and it'll start to become more like a stock or more like an industry that you can start to predict, what's going to happen. Like Facebook, you have some level of prediction of where it might go. When it first was, look at Twitter, when they first started these, you didn't know what's it worth. Look, what's Google? When Google come out at $80 a share, where you're like, wow, that sounds expensive. Well, that's a good stock. Well, Google's now over $1,000 a share. And you'd be going, well, shit, Google, we know it's a good business. But back then, it could have been massive or it could have went to nothing. So then it starts to become, as we get more data and more information, that's what's happening with Bitcoin. So you're ahead of the trend. So by knowing this information now, you have the potential to have a competitive advantage out amongst other people that blissfully ignorant of it, or just don't understand it, or don't have that psychology, or they do get in, it's like, well, I hope I can get rich. You can see how they're setting themselves up for failure. We don't know what the future is, so we're trying to do everything we can to position ourselves to profit from a potential upside. That's why I'm happy when I post on Facebook yesterday, someone saying, well, what do you think of this comment? Because I know I've been bullish on Bitcoin because the article Bitcoin's crashed. I said, all I post was a great buying opportunity. That's how I read it. But that's because I see that and I'm happy to keep buying. I've been buying Bitcoin at $1,000. Okay, so if Bitcoin goes back to 1,200, unless I change my viewpoint on it, I'll continue to buy Bitcoin. Why? Because I've been staggering my way into more and more because I'm confident in it long term. Now, am I happy to take a risk on that money? Yes. What's my worst case downside? Goes to zero. Worst case. Can I live with that? Yep. Upside, fairly significant. Okay. Why am I doing it? One, yes, I'm an investor, buy and hold investor. Two, I have people trade money for me at times. And three, ideologically, I support what Bitcoin's about and creating a change in the monetary system. So I'm also happy to support that. I'm also an entrepreneur. I see opportunity. That's why we've launched the Bitcoin Exchange. That's why we're looking at holding an Australian Global Bitcoin Conference March next year here in Melbourne. We're talking to the Winklevoss twins and Bobby Lee from the Bitcoin Exchange to come and be guest speakers, etc. There's a rapidly emerging industry around Bitcoin. So there's all sorts of opportunity to see where it goes. So, any final questions? Otherwise, we'll take a lunch break. After lunch, you're going to get 60 minutes for lunch. You're going to hear from Patrick. He's a financial trader, and he's going to share his viewpoints of how you can use stock trading techniques and strategies and potentially apply them to trading Bitcoin. Some of you might want to become a trader in Bitcoin. And then we're going to have Lou come on and share a little bit more about some details and how you get started, all the intricate details if you actually want to become a Bitcoin investor. Makes sense? And then we'll finish up hopefully ahead of time. And then I'll come back at the end and answer any questions at the end of the day if you've got any more questions. If you've got any questions now, we'll fire. Yep.
Just before I had the job and somebody mentioned that you've got somebody's self-managed super fund. Is that something that is, he wasn't sure?
Did anyway.
Yeah. So is that a possibility from your knowledge?
Yeah, it's a good question. I can't give advice on self-managed super funds, and that's one area that you could speak to accountants. But I think the reality is we're certainly, we've wanted to buy out our super fund. We've just been waiting for an account with that one to be set up. But certainly is our intention. The reality is I don't think you can seek advice on regulation even from an accountant because there's no ruling on it. So, yeah, so there's no ruling on it. So they can't really say yes or no. You can't. Can you, I guess, does anyone know, can you invest in Forex currency from super funds? Are you allowed to do that? Because that might be, it's a currency, so that might be the benchmark that they might consider.
People have told me they've done it. I haven't.
Yeah. That might be, might you say, well, what's the ruling on, are you allowed to use super money to invest in Forex? That's a currency. If you are, then that would probably be what it's going to be in the future when they regulate Bitcoin. Right now, if you do it, yeah, I think no one knows. So I don't know what the regulators can do if they don't want you doing it, so they can't. So it's an unregulated market. So, yeah, your guess is as good as mine. But I'd say Forex is probably the benchmark. Any other questions? Very good. So 60-minute lunch break. There's a cafe at the bottom of the building. There's a couple of places across the road. Or you got 60 minutes, you can walk up to Clarendon Street as well. And if you want a bit of a stroll. And then you'll hear from Patrick after lunch and Lou. Very good.